Namaste and welcome to another episode of Skytale Insights. Very excited for today's episode as we have our very own Miguel Mireles. Hi, Miguel. Welcome.
Great to be here. Thank you, Ben. Much appreciated.
Yeah, I'm looking forward to this one. You know, for those people who don't know you, I know you came from investment banking about a decade or more, if I recall. You were vice president at Houlihan Lokey. Before that, you were at Baird. So a lot of really great banks, a lot of good investment banking experience. And then, you know, very lucky for Skytale, you have a lot of experience in the spaces that we play in. And today we're going to be diving into dental and the consolidation that's taken place there. And obviously the firm that you came from is one of the big leaders in that space. So you know a thing or two about dental.
Yep, absolutely. It's a great space. There's always a lot of activity going on. You have some really talented executives. You have really talented CEOs and providers and doctors, and it's at the intersection of a lot of really great things with technology as well. So I'm passionate about it, and I love just being involved in the industry. So thank you for having me, Ben.
Yeah, thanks for being here. And I failed to mention that you're a director of the investment banking firm here at Skytale.
Yep, great to be here.
Yeah, great to have you. So let's get into it. Maybe we can start with a bit of a history lesson. You know, what have you seen over, let's say, the past 5 years? What have you seen and witnessed in the DSO, you know, kind of M&A space?
Well, it depends how much time you have, but you know, I'd say the last 5 years have been really exciting. There's been a lot of challenges. There's been a lot of positives. So I'd take it back to, if you look at, let's call it, 2020 was obviously COVID. So that was an adjustment period for a lot of practices and business models where folks were scrambling. And so then you had 2021, which you had a ton of pent-up demand where you had missed appointments or backlogged appointments that were now getting done and slammed into 2021. And so you also had this fervor, pent-up demand from the M&A side as well, where you had a ton of dry powder and a ton of capital to be spent. So you had a lot of deals being done. You had numbers were really high for practices. And so it was almost an exuberant period, if you will. Then you take that into 2022, and you had what many refer to as the Great Resignation period, and that's where you started to see a lot of the wage or a lot of the labor issues, if you will, whether it was around retention or it was increased pay. That started to put a lot of pressure on businesses, and it also started to hurt with overall being able to meet the demand that businesses had. So you had a bit of a depression in numbers there. And then if you start to play that out into what happened in 2022, a lot of businesses started to self-correct, figure things out. But at the same time, with the rise in interest rates, a lot of the bigger platforms that, grease the skids, if you will, of the lower middle market dental M&A started to have their own funding issues, whether it was they were over-leveraged, or they were towards the end of their hold period, so financial sponsors didn't necessarily want to put as much capital into it. And so you had that 2023 period that was kind of like, let's level set. And then now as you look in 2024, there's a lot of reasons to be optimistic, not only for now, but for the near term, because you have a lot of those platforms have either traded or in the process of getting traded. When I say traded, I mean sold to another financial sponsor. So what you have there is you in a sense, reset the funds that they're going to have to be able to deploy to buy businesses. And some of them, the ones that did not trade, they figured out their debt issues, right? So they either just recapitalized or they're just in much better financial footing. And so you have that. In addition to that, the businesses are performing better. So all those things, and with the potential carrot of a rate cut or two, perhaps end of the year, beginning of next year, who knows when that's going to happen. But I think beyond that, a lot of positive momentum in dental this year for M&A.
That's great. Yeah, some of those were going down memory lane for sure. You went all the way back to COVID, and it really felt like a roller coaster as you were talking through 2020 to now 2024. But it, sounds from listening to you that 24, you seem pretty bullish on it. Now, beyond 24, what do you expect maybe over the next 5 years if you have a crystal ball? What's going to happen? Everything from deal activity, values, whatever it is that you want to touch on there.
Yeah, I think what's going to happen is there are a couple things that are going to happen. One, consolidation is going to continue, and I think it's going to accelerate at the end of this year and going into next year and the next couple of years after that. And then you're also going to have what I think is going to be, you're going to start to have maybe some of the winners and losers in the space start to separate themselves. It's a large enough space where you'll have multiple winners, but some are just going to, whether it's a better demographics, better operating model, better how they incentivize doctors, the deployment of technology, all those things. You're going to start to see the winners of these consolidated players. And so I think what that does is that's going to create an opportunity for a lot of practice owners to partner with some of the better platforms in the space. So it's really important that, if you're thinking about partnering down the road, that you stay attuned to what's going on and who are some of the better, more skilled operators in the space.
Makes sense. And, you mentioned demographics. Are there any specific regions, if you had to throw a dart at it, that where you anticipate more growth in M&A activity as compared to other regions?
Well, from talking to a lot of the bigger platforms, like where they're looking to deploy capital, because as you know, it's what's going to drive attractiveness is the creation of a market and the competition for those practices, right? And so, if I were to take all the platforms that I have conversations with on a monthly basis, and I were to kind of aggregate where are they looking to buy practices, or whether it's to either densify their current footprint or to expand into new footprints, I would say the Southeast, the Southwest, all not surprising, right? They're high growth population areas, typically lower wage costs. There's just a lot of really good trends in those specific areas from a business standpoint, and not surprisingly, that's where folks want to be. But at the same time, I would say we still get I still get a lot of calls for practices that are maybe ones that in areas that you wouldn't think, like the Northeast. Still a lot of California. A lot of folks are invested there, and even though the business trends may not be what you'd like, there still is a lot of attention being paid just due to the sheer population size.
And now, as you go into that, if I'm one of these practices, if I'm either a solo practitioner, maybe even a multi-site, but I'm still founder-owned, it's still my own capital, and I know we get this question a lot from especially our consulting clients. With the growing presence of consolidation, larger DSOs, obviously there's a lot of benefits that happen with that. If I'm a small practitioner, maybe touch on 2 points. One, if I want to remain competitive, do you have any hints, any strategies that I can deploy? And then also, beyond remaining competitive, if I ever want to become a practice or a group that's maybe acquired, what are some things that I ought to think about on both of those angles?
Yeah, I'd say, so I'll answer just quickly and then I'll dive into the two. So on the first point, I'd say, how do you remain competitive? It's creating that exceptional patient experience, right? You want your patients to come in, whether think of the patient journey from, how they find you on a website, right? Like what does your website look like? What is your branding? What is the scheduling experience like? Are they treated well? What does that first impression look like when they walk into your office? Are people smiling? Is it, what is the paint? How's the room painted? Like all those things. At the end of the day, they seem small, and obviously the care that they receive is the utmost importance. But all those little things add up and can help you remain competitive and have an intimate feel with your patient, and that goes a long way for not only bringing them in, but then also keeping them. And so I'd say first and foremost, I would do that, right? And then so if I would say to answer your second question, how do they get ready for a sale process? One of the things that I think gets a bit overlooked, just because it's hard, it's not easy, is data generation and capture of your business, right? So when a platform is looking to acquire, your set of locations, or your practice or group of practices, one of the first things that they look at are your KPIs, right? So what is your production per shift, production per day, production per doctor? What are the services that you're actually charging patients for, and beyond? And so your ability to tell your story with data of your practice is huge, and will make the difference between them, being able to pay a more of a premium for your business versus those that don't. Because if you can stand behind the data that your business has, that will get you through the diligence process and make them feel comfortable. And in addition to that, it's not just capturing the data; it gives them a sense that you're managing the business a certain way. Because if you aren't capturing a set of metrics, the buyer just assumes you don't care, right? And you could say, hey, I'm calling my doctors, I'm pushing them to sell this, sell that. Well, where does it speak to it in the data? How do I know you're managing it? And can you on a daily, weekly basis pull a report that tells you how the rest of your practices are doing, the rest of your offices are doing, who's doing what, and that's huge. So I can't stress that enough. Is the data piece.
It's good. Now, when you're going through a process, we get this question a lot, and certainly something that we've even encountered with clients post-transaction. Integration, right? That's always a big one, because a lot of these deal structures, they have earnouts, they have various things that our sellers are incentivized to continue to perform. So you can't have people leaving. Right. What are maybe one or two challenges that DSOs, the acquirers, run into when they're integrating, kind of new acquisitions?
Yeah, I'd say, and this is where finding a partner that fits is so important, beyond just the terms and the valuation that you receive in the acquisition. I'd say it's oftentimes, what is the culture like from a standpoint of how you run your practice, right? Are they hands off? Are they hands on? And in the areas where they are hands on, is that something you're willing to give up, right? And because if you're willing to give that piece up, like that reduces the friction immediately, and that'll solve a lot of those integration challenges, whether it's any of the back end functions that you have, certain ways that you recruit staff, or ways that you treat your patients, or follow-ups, anything like that. I think it's so important to have that culture fit, which then drives the integration process.
That's great. Are there any other, kind of ways to mitigate these challenges that you can think of?
Yeah, I'd say one is technology, right? So anything that you can do to take the decision making or the review process out of the hands of a human and into something that is systemic or processed into your business is a huge help, and something that the acquirer can leverage.
That's great. And then you talked earlier about some of the things that owners can do to increase the attractiveness of their practice. In recent times, have you seen any changes in deal structures or valuation methodology within the dental space specifically? And if so, what are some things that you're seeing right now?
Yeah, I'd say, the good thing for practice owners right now is there are so many different flavors of how buyers structure their incentives, whether it's there's one class of shares for all where everyone's aligned, or perhaps someone is really bullish on their own practice and they also want to get exposure to the overall platform, so they'll have equity at the practice level, and then they'll also have a piece of the overall holdco level. So it again, comes down to how are you aligned? Do you want to be, aligned from the standpoint of the entire organization has one class of shares, or do you want to say, okay, well, I want a little bit more exposure to my own what I do on a day-to-day basis, and maybe that JV structure is a little more attractive to you. So, not to say that one's right or wrong. It's just there are trade-offs, right? And you have to decide where you're at in your career and what your plans are and what your designs are for the next 5 years as you partner with the acquirer. So it's again so important to find the right one. And luckily there's so many different flavors. Like, it's all about finding the right fit for you.
Yes, yeah. I mean, we have clients all the time that have completely different thoughts on, what an ideal partner looks like for them. So, yeah, I think it's key what you said there is that there are so many different deal structures and theses from buyers that the key is making sure that you find the right one. You touched on this a little bit already, but as far as valuation, you certainly mentioned data and knowing what was going on in your practice to give the buyer comfort that you do value that you do focus on those things. Are there any other factors that determine valuation that you could share with our listeners?
Yeah, absolutely. Organic growth is key. Same store organic growth is what will separate your business from others. And again, it's interesting how what I said earlier about the patient experience, right? You get that right, as well as being able to generate customer foot traffic. Like, if you get that right, then your organic growth is going to go up, right? So again, all these things tell the data tells the tale of your business. So if you have strong organic growth, that's going to be key. And if you're able to articulate why you have strong organic growth and tell that story to a buyer, that's going to really make you shine among others. And then I think too, just having the 101 stuff done, right? Like your compliance, you have to be, make sure that's up to speed, that's tight. All the back office stuff, like all that stuff is being taken care of. Everything on the legal side as well. So I would say those are the key areas. But organic growth, I think, is premium, especially in today's market.
Yeah, that's a great point. Yeah, leave a little meat on the bone too,
right.
Is important. So I think that's a great answer. Now, GP had its time in the sun. Are you seeing any specialties or anything within dental that you think right now is pretty hot and attractive from a buyer perspective?
Yeah, I'd say there's a lot of room for consolidation among specialty. Right now, one that we really like is oral surgery. The unit economics are very strong there. There hasn't been as much consolidation in that space. And what I think is unique is maybe not near term, but if you look at oral surgery, and if you look at oral health in general, a lot of care providers, a lot of doctors view the mouth as the gateway to your body's overall health, right? So, who knows down the road if some of these larger oral surgery platforms could pair with, whether it's a hospital or primary care or some type of something that's a little more outside the box. So oral surgery is one that we like. Love pedo as well. That's a really good one. A lot of strong reimbursement dynamics if investors are keen on that. I'd say pedo ortho platforms are really strong. There's a lot of synergies between being able to serve kids as well as and then have them get ready for braces and care for them down the road. And then I'd say also, just orthodontics in general is a really good one as well. And perio, I'd say, all the specialties are really strong. So definitely have our eyes on those.
I mean, it sounds like great news for the market as a whole. Now, would you mind maybe sharing either a key takeaway, or is there something that, maybe I didn't ask that you want to touch on as it relates to consolidation in the space and where we're going?
Yeah, I would say that, I think we could have, how I've been phrasing it, as a mini 2021, where you have a lot of potential pent-up demand that's just waiting to be released, right? So you have a lot of, if you look at the financial sponsors that own a lot of the larger platforms, they've either recently traded or they're in the process of going to market within the next 12 months, right? So they're going to have, new, fresh, dry powder to acquire. You're also going to have potential interest rate cut here, right? So you're going to increase liquidity on that side. So, and to that point, there's been half as many deals almost the last 2 years being done, right? So there's going to be this huge demand for inorganic growth and to acquire practices over the next few years. So my advice to listeners that have potential designs on going out to market or even just testing the waters in the next 12 to 18 months, I'd start thinking about what are ways that you can start getting, premium advice on how best to position yourself for that upcoming demand, right? Because you don't want to be kind of towards the end of that frothiness, if you will, because it's just not a good place to be. You want to be in that either first quartile or middle part of that where you're being able to take advantage of just the overall market fervor. So, yeah.
I like that, a mini 2021. I mean, that would be great news. So excited to see that. Miguel, anything else you want to share?
No, I just appreciate you having me on. I'm really excited to be here at Skytale. And feel free to reach out to us. We'd love to chat with you and get to learn more about your business and your ambitions.
Yeah, well, I mean, this has been fascinating. I always like picking your brain on dental because, obviously the access you've had to it over the years is pretty phenomenal. So this is super exciting. Thank you for sharing. If I did want to get a hold of you, how do I get a hold of you?
Yeah, you can reach me. Just go to Skytale's website, or you can email me at miguel.mireles@skytalegroup.com.
That's great. Thank you so much for coming on, Miguel. Really enjoyed it.
Thank you.
Thank you for listening. I hope you got some good nuggets, and please feel free to subscribe to Skytale Insights. Thank you. Until next time.